Right, good afternoon, everyone, and thanks for joining us today. So, for those of you who don't know me, I'm Calum, and I work on the research team here at StuRents. So, before we hand over to Richard and Scott for today's presentations, just as always, there's a couple of bits of housekeeping to take care of. So, the webinar is being held to coincide with the release of our quarterly reports. They're due to be released in the next couple of days, but as always, you'll receive email communications when they're ready to go up. So the session is being recorded, so everyone on the call today will receive a copy in due course. So we're excited to be joined by a leading industry expert, who today is Scott. So we'll be continuing the data discussion at the end of the presentations, and hopefully answering some of the Q&As that you've already submitted. If you do have any questions for us, you can submit them in the Q&A function in Zoom. So we'll try and get through as many of those as we can after the presentations. So on that note, it's my pleasure to introduce our guest for today. So Scott, can you give us a quick 30-second introduction to yourself?
Yeah, thanks, Calum. Hi, everybody. Thanks very much for having me on. So I'm Scott Blakeway. I'm the Director of Consulting Services at Fjeld Consulting. And we are, some of you will know us as a procurement consultancy, and we've also been doing a lot of work with StuRents through some project work that we've been doing for another client, building out a number of systems and embedding StuRents into their operation. And part of that work has involved building out a number of Power BI dashboards and looking into reporting for them initially. And we've developed that work a little bit further for a number of other clients with StuRents. So looking forward to sharing more information about what we've been doing and some of that work today.
Right, great stuff. Looking forward to hearing from you. So before I hand over to Rich to run through today's data presentation, so there is a poll coming up on your screen now. So if I just run through the questions quickly. So question number one is just on understanding the student market. So how have your expectations changed for the rental growth for PBSA over the last 3 months? So this is for the 24-25 academic year. So more positive, neutral, more negative are the options there. So same question number two for the HMO market. So what are your current expectations for rental growth there? So again, more positive, neutral, and more negative. And then question number three is just how has your overall view towards the student accommodation market shifted? So again, is that more optimistic, unchanged, or more pessimistic? So worth noting that that poll can be minimized. So as soon as you've submitted your answers there, you can just go ahead and close that. So I'm now pleased to hand over to Rich to run through today's data presentation.
Thanks, Calum. I guess quick introduction before we get started, just for anyone not overly familiar with what we do. So to kind of break our business into 3 areas, we have the listings platform, StuRents.com. So we advertise over 750,000 beds nationwide. We're also a leading provider of property management software. That's through our brand Concurrent, which I know Scott will touch on a bit later. But to date, we've executed over 2.5 billion in tenancy value through that system. And obviously, the focus of today really is our intelligence services. So we are somewhat uniquely positioned in the market to be able to leverage those 2 platforms and obviously supplement it where we need to provide very detailed, independent data to the market. Just a quick run through what we're going to cover today. So we're going to take a relatively deep dive into latest clearing data, and then we'll move on to PBSA occupancy or leasing velocity and look at how that's varying between a few different locations. We'll then do our kind of usual updates around search behaviour and updates to the planning pipeline before we hand over to Scott. And as Calum said, we'll go through some Q&As at the end as well. So to start with, as I say, taking a deep dive into the latest clearing data. And before I kind of go through these slides, what is worth noting is that UCAS do actually update these data sets each day. So it is worth bearing in mind that they will continue to evolve. But it does give us a very good indication in terms of the latest demand trends from an undergraduate perspective. All the charts we're going to see here from UCAS are the data set that was released 12 days after results day. So pretty much up to date, but worth just bearing that in mind. So to start off with, the chart here is looking at total acceptances over quite a long time period and just splitting that by the kind of core demographics or domiciles that they report on. And as we can see, total acceptances are up slightly, so 1.2% as of 12 days after results day. Breaking that down by those 3 distinct domiciles, so UK numbers are actually up 1.5% year on year. What will probably be of interest to a lot on the call is the slight decline in what they classify as non-EU acceptances, which are down 1.1% year on year. EU numbers, as you can see from the kind of grey area from the chart, is a relatively small proportion, particularly post-Brexit, but those numbers were pretty much flat year on year. Obviously, it's worth noting that these figures don't include postgrads, but we'll come back to that in a little bit. Just breaking down the UK numbers in a bit more detail, I thought it's just worth kind of highlighting kind of those trends, but specifically for UK students. And the reason for that is actually, if you look at the growth in 18-year-olds, it's actually more positive. So again, total acceptances just from UK 18-year-olds is actually up 3%. So up more than the total. And the reason for that is what we are seeing, as you can see from the various coloured lines there, are declines in what we might classify as more mature students. So the overall number has been dragged down slightly, but actually the underlying 18-year-old growth and demand level is still looking pretty strong. And the one that probably sticks out there is the 19-year-old bracket, which has seen pretty consistent declines since 2015. Looking at participation rates next, that's one that's worth, again, just briefly touching on. So on this particular chart, the bar represents the participation rate and the line represents numbers of applicants. Reason why I wanted to pick this one out is really just to show that actually in the last couple of years, the participation rate has actually fallen slightly. So somewhat reversing a little bit of the trend we've seen in recent years. But what it does mean is that that growth in UK demand is being driven by basically increases in the population of 18-year-olds. So what will be really interesting to see going forward is whether that participation rate grows again, or whether we see it plateau or fall, and obviously the impact that will have on total numbers. But just an interesting trend to point out that's worth keeping in mind. Moving on to kind of core China and Indian demand next, obviously really important and interesting for operators of PBSA in particular. And we can see from the chart on the right, which again is looking at acceptances just for those two countries, the huge growth, particularly from China. 2022 and arguably 2023 were very, very strong years from a undergraduate acceptance perspective. 2022 in particular, just highlighting that, numbers in that single year jumped by 28%. So it's a huge year-on-year increase that we saw in 2022. For a point of comparison, the 5-year average prior to that was 16%. So it definitely can be seen as a somewhat extraordinary year. And that does mean that year-on-year comparisons are somewhat skewed, given that significant jump. So that kind of raises the question. This year, numbers are down slightly. So we're looking at about 4.9% decrease so far in the clearing cycle. And we're down about just over 15% compared to 2022. So there are some year-on-year declines, but the question therefore is that a new normal, or is it just a case of demand reverting back to something that's more sustainable in terms of long-term demand growth? And obviously that's something we're going to keep a very close eye on, but again, interesting to note. In terms of India, you can see numbers have somewhat come off this year as well. Demand growth obviously not there compared to previous years, and numbers are down 2.6% year on year, but they're actually still up relative to 2022. So again, interesting to note. Looking at some other countries, so we've kind of picked out some of the larger kind of countries that are deemed as non-EU essentially, but excluding China and India, just to highlight some of those trends. If we look at the US, for example, interesting to see kind of continued growth there. United Arab Emirates, also really strong growth. Numbers there increased 8.5% this year, so pretty strong year-on-year growth. Turkey also very strong, interestingly, so 34% increase in a single year, which is obviously pretty significant. The one from actually two from a negative standpoint, so Hong Kong's come off slightly since 2021, but also the collapse in Nigerian acceptances. There's been a lot reported about demand from Nigeria, currency issues and local economy issues obviously coming into play. But if we look at the numbers, they are down 32% in a single year. So that is naturally very significant. And that's going to impact certain universities that have high exposure to that particular demographic, which isn't going to impact all universities, obviously only those that are particularly exposed. Looking at, I guess, the broader data sets, one thing that's worth noting is, and again, this is just for undergraduates, but the very long tail in terms of where these students are coming from. So there's actually 128 individual countries within that data set, and that equates to 63% of that non-EU demand. So it's a very, very long tail. Having said that, China, 27%, India, 10% are still the biggest contributors to that non-EU demand. And obviously China, again, very important from a PBSA perspective. But what the chart does highlight is how those patterns of demand are changing over time. And again, that's one that operators are going to want to keep a close eye on. Looking at the data by tariff, and again, for anyone not familiar with what we mean by tariff, this is a term that UCAS use. And the easiest way to think about this is your more prestigious universities that require higher grade entries to get into those universities are deemed as higher tariff, and the lower tariff is arguably going to be your less prestigious universities. This particular chart is looking at total acceptances over, again, a pretty long time period. But what you can see is how that demand is changing. Obviously, flight to quality is a trend that, again, gets talked about a lot in the industry, but that really is playing out. So we can see how higher tariff providers have been the big beneficiaries and have continued to see good demand growth over the long term. Medium tariff, fairly flat, a little bit of a decline, but not too bad. The one that sticks out like a sore thumb, to be perfectly honest, is that lower tariff provider line. So that has seen consistent long-term declines in demand or acceptances for those particular institutions. And that obviously does cause a little bit of concern for those universities or operators that have exposure to those. What is worth noting is we shouldn't bracket every single institution as being in trouble or lacking demand growth. There are obviously going to be outliers within those brackets, but broadly long-term trends are still interesting to note. Looking at the same data set, but specifically for non-EU students, not quite as extreme, but again, the big takeaway here is that really strong growth at higher tariff providers, which has been really positive. And actually this year, it's the only bracket that has seen growth. So 2.3% increase in acceptances from non-EU students, medium and lower, both reporting declines year on year. And you can see from the line chart as well, both of those tariff groups got a bit of a bump kind of post-COVID, but that's kind of seemingly stopped. As mentioned at the start, that data set or these data sets we've currently looked at doesn't cover postgrads. This is actually a chart we displayed basically in the last quarterly webinar, but a slightly different version of this, but I thought it's worth just taking a moment to look at it again. And the reason for that is understanding the data in context to UCAS, but also to HESA. So HESA has finally released their 2022 numbers. And the reason why it's worth looking at this is Office for Students data goes up to 2023. So on the chart on the right, what we've done is we picked out 6 universities and purely looked at postgrad numbers. And this is OFS data, not HESA. But the reason it's important is it gives you a potentially very different outlook at those universities if you have the latest information. So if you're entirely relying on the data from HESA, which will go up to 2022, you're essentially looking at the peak of demand in postgrads at those universities. Whereas if you're looking at the OFS data, which goes up to 2023, you'll see that all of those institutions have seen a significant reduction year on year in postgrad numbers. So again, it shows the importance of having exposure or the ability to look at all the data sets in the market and not just HESA, for example, in this case. Finally, before we kind of move topic slightly, on visa numbers, just worth noting, because again, it's been in the press quite a lot recently. You'll see from the bar chart on the right, we currently aren't quite in the peak of when these applicants submit. That's typically in August, as you can see from the peaks there. We won't get that data, obviously, until August has finished. But what we can see so far this year is that those applicant numbers are down, so down 16 or just over 16% year on year. Where we lack, I guess, visibility is understanding the splits by specific countries. So again, the reason that's going to be important is that if that decline or declines is attributed to, say, Nigerian students, not Chinese students, that's potentially going to have a different impact to particularly PBSA demand. So again, that's something we're going to keep a close eye on. So kind of moving topic next, moving on to PBSA velocity or occupancy. For anyone on the call not familiar, so we've been doing this for a while now, and we have about 150,000 beds now taking part in our occupancy survey each month. And what it allows participants to understand is how they are leasing relative to their markets they're operating in. What it means is we can take that data, aggregate it, and look at specific cities or at a national perspective. And what we wanted to do in this session is just pick out 2 cities. So we've kept them anonymous. And the data we are showing represents the leasing velocity for the current cycle, so 2024-25, and how that compares to last year. Now, this particular chart is focusing entirely on studios. And what we can see in both of these examples, so City 1 in particular, is that actually leasing velocity is slower this year for studios in that particular city. If we look at City 2, it's a bit of a mixed bag. Actually, it's slightly up compared to last year, but as of June was pretty much in line. But you can see how those markets have differed from a studio perspective. Looking at the same exact cities again, so just 2 in this case, but focusing on clusters, we can see how performance has actually improved. So in both of these cities, we can see the leasing velocity for clusters within PBSA has actually improved year on year. In the example of City 2, fairly notably. What is also worth noting with the City 2 data is actually clusters are now performing better than studios, which we don't typically see from a leasing velocity standpoint. And what it really does highlight is just the difference in performance between locations, but also the difference in performance between unit types within the same location, which can be pretty significant. Moving on to our search behavior next. And this is a chart we typically include in each session, so we'll run through these relatively quickly. The chart on the right depicts, of those students searching on the platform, what are they searching for in terms of unit mix, i.e. are they searching for a studio, 2 beds, 3 beds, 4 beds, etc. Now, if we compare the data quarter on quarter, we can see how demand has continued to shift towards those smaller unit sizes. So in Q2, for example, the most popular size was a 4-bed. In Q3, it was studios and 1 beds. In terms of quarters and what I'm referring to, so actually Q3 refers to the April to June period, and that coincides with the letting cycle, just for clarity. But if we look at the numbers, 4 beds and above this quarter, about 28% of demand, last quarter, about 43%. So there has been a shift. That is entirely expected. So typically what you would see throughout the letting cycle of 12 months is greater demand for larger sizes early in the cycle. And as we go through the cycle, that shifts towards the smaller sizes, which are typically what your international students are going to be searching for, albeit not exclusively. Looking at listing views next and breaking that down by accommodation type and demographic. So for clarity, listing views is essentially taking our data from the platform, and whenever a student is running a search and then clicking through to view an individual property or room type, we're obviously tracking those interactions, and that's how we're producing these insights. This particular slide is focusing purely on searches made by UK students. Now, the chart on the right shows over time what are the price points being viewed by those students by accommodation type. So the blue line is HMOs, the kind of orange line is PBSA. A couple of interesting takeaways to take from this. So one is actually the narrowing in the spread of those price points. So if we look at this year, for example, in the HMO market, UK students are looking at properties that are 8.3% higher than last year, at about £150 per person per week. In the PBSA market, that increases 3.1%. So that's naturally creating a bit of a reduction in the spread in terms of what price is being viewed by those particular students. The other key takeaway, particularly from the HMO market, is we can see there's two spikes on that line, which are coinciding with October. Now, the reason that's interesting is that you can conclude from that that UK students that are searching very early, so they're searching in October for the following academic cycle, are prepared to pay more. So it suggests they are searching for better quality HMOs very early in the cycle and prepared to pay a bit of a premium for that. From a PBSA standpoint, that's interesting. Obviously, most PBSA operators are not releasing their pricing on October 1st, but it does suggest for operators of PBSA, if you are looking to attract domestic students, then that's possibly a strategy you want to think about in terms of actually having pricing ready and live as of October 1st, when we see that bit of a spike in demand from UK students. Moving on to students from Asia next. Again, same data, splitting it by PBSA and HMOs. Less growth is the main takeaway from here. So if we look at, again, the price points being viewed by Asian students for PBSA this year, we're looking at about 2.8% increase year on year, and that's down from about 8.5% last year, with an average per person per week price of £215 per person per week. So it is interesting. I think it does raise the question of, are we kind of reaching a bit of a ceiling in terms of price, or is there more price sensitivity this year? Anecdotally, we hear that. That seems to be suggested in the data as well. What is also worth noting is that whilst we're showing the data for both HMOs and PBSA, most Asian students will be looking for PBSA accommodation, whereas most UK students will be looking for HMO accommodation, and that is reflected in the data as well. Moving on to planning next. Again, a chart we include in each session, but updated. Similar trends to what we've seen in recent quarters, really. There has been a slight uptick in planning activity compared to where we were maybe a year or two ago. In terms of numbers, we were looking at about 11,500 beds submitted in the last 3 months. That is actually down year on year, but it's up versus previous years, which I'll come to. In terms of those beds approved, we're looking at about 9,300, and that's up pretty significantly year on year. In terms of the locations, we're seeing that activity. We'll see that on the next slide, but it is fairly limited to a handful of locations. As I mentioned, if you look at activity this year versus a few years ago, so if we take 2022 as an example, then actually the number of beds submitted is up 36%, and the number of beds approved is up 20%. So relatively speaking, yes, we're low from a historical standpoint, but we're actually up compared to where we were maybe a couple of years ago. As I mentioned, that planning really is focused on a handful of locations. You can see London, Newcastle, and Bristol equated to over half of all beds submitted in the last quarter. It is worth noting the Newcastle figure is skewed by the Newcastle application put forward by Unite with the university, which we'll show in a minute. As suggested, that planning really is limited to relatively few locations. As I mentioned, Unite and the university had a very big submission in the last quarter, so over 2,000 beds. I won't go through all of these line by line. There are obviously a lot more than this. So this is really just picking out some of the more noticeable schemes. Regal's got a very big one in London, obviously. Fusion has been very active and put forward a pretty big scheme in Cardiff as well. In terms of those approved, again, Birmingham, Bristol, significant applications being granted planning permission. Final couple of slides from me before we hand over to Scott. Something we've kind of discussed on previous sessions, but again, worth reiterating, is supply and demand and how we are looking at that relative to what a lot of the market does. So this particular chart on the right-hand side is depicting changes to supply, which is the orange line, versus changes to what we classify as core PBSA demand, which are the blue lines. We've got a variety of blue lines there because those are essentially forecasted. HESA data is obviously not up to date, which is why we're doing that. It allows us to understand how supply and demand are changing over time. I mentioned core demand. What we're referring to here is basically any student living away from home, excluding second and third year domestic students. Obviously, we run this analysis under multiple scenarios for customers. This base level scenario excludes second and third year domestic because a significant proportion of those are going to go into the HMO market. And in some markets, your average HMO inquiry is, say, £100 a week. Those particular markets are going to find it very difficult to attract domestic into, say, a £200 per week PBSA. What the data does show, though, is from a national perspective, supply and demand fundamentals do look pretty good. This particular analysis is probably a little bit conservative because it's assuming the pipeline in its entirety gets delivered, which is arguably unrealistic. But longer term, we can see that demand growth, if it continues, means it is likely to outstrip supply growth. Having said that, every location is different. So we focused on Nottingham. There's been quite a lot of talk in the market about Nottingham recently, but for us, this analysis quite accurately depicts what's happening in somewhere like Nottingham. So as we've just seen from a national perspective, orange line represents change in supply, blue line change in demand. So we can see between the periods of 2017 and up to about 2022, possibly 2023, demand growth was outstripping supply growth. So that's a positive for the market, for operators and investors. But Nottingham has a very big pipeline, and this year has had significant supply growth. I think from a private PBSA standpoint, over 10% year on year, which is pretty significant for a single year. And what the data does suggest is that supply growth now in Nottingham might be outstripping core PBSA demand. Now, what it means from a practical perspective is operators are going to have to either take market share from each other or try and attract domestic out of the HMO market to make up for that shortfall, which may or may not be achievable depending on rents, location, and lots of other factors. That is entirely reflected in our occupancy data. So our occupancy data for Nottingham does show it is slower this year versus previous years. So looking ahead, that's a market that is going to be very interesting to see how that plays out, given the chart on the right-hand side, which is arguably not particularly favourable. So to summarise from me before I hand over, demand divergence is still a play. We saw the data from a tariff perspective, very much winners and losers in the market, which is still very much the case. That's obviously falling or flowing through into leasing velocity. And as we saw in the slides, there are significant differences, not only at a national and city level, but also within the same city. Price demand has definitely slowed from a growth perspective this year, albeit is still up from Asian students. And planning, as we say, is relatively constrained to a few locations. And then finally, as I mentioned just now, it really comes down to understanding local fundamentals. National data sets are useful, interesting, can paint a great story, but knowing the supply and demand fundamentals at a micro level is going to be key for making kind of really informed decisions. That's it from me. So I'd now be delighted to hand over to Scott. Scott, if you want to take control, you'll be able to control your slides, and look forward to hearing what you have to say.
Thank you, Rich. I think we're handed over there, so I think we're good to go. And thanks, thank you for that, and thanks again to StuRents giving us the opportunity to speak at today's event. I know it's a crucial time of year for many in the sector, and there's a lot of people on the call today who've given up their time to join. So it's really good to see how many people are on, and to be able to share what we've been doing and the work we've been doing with Concurrent. So as I mentioned at the start, we're Fjeld Consulting and have been historically supporting clients across procurement through our outsourced procurement services, but recently have expanded into a number of project management opportunities, and that's led to some really exciting collaborations with clients and with partners such as Concurrent. Or StuRents, should I say. And so I work with StuRents has involved providing reporting solutions. And I just wanted to use some of this time to talk you through that. And I think to demonstrate what's possible, both from a reporting perspective and some of the uses of the Concurrent software and the work that we've done in this space. So the situation kind of came about as a part of our role through our procurement work, where we've been reporting for clients for a number of years, as you'd expect. And the importance of data and good information and in managing contractors, making sure we're shining a light on that. So our team have built a number of dashboards in years gone by. And that's where this opportunity arose, and that we thought we could do something in this space and build out some leasing reports, build out a number of reports that would really help our clients maximize the information that they were gaining through Concurrent. Concurrent obviously brings about the ability to export live data quickly through the API platform, and that's something that we've obviously been utilizing, and has given real access into the system, which in some ways is one of the strengths, I suppose, in that there's the ability to export as much information as you need. So clearly, reporting continues to be a key challenge for operators, investors, asset managers, owners. Through some of the work we've done on onboarding some of these reports, we've seen multiple Excel workbooks, pivot tables, PDFs, and everything in between that people have been working on a weekly basis. And I think even in the early days of some of our reports building, by the time we'd finished the report for the week, the data had moved on. It was very difficult to get these things right. So the work we've done has now tightened up that process for clients, and means a lot of the homework and the home creations are taken away, and some of those pain points and time can be better spent. It was clearly a frustration for partners at the StuRents Occupancy summary, and was a key theme that I think prompted us to be asked to speak at this event. And it wasn't too long ago that I recall myself having to run daily pivot tables from booking reports, and just thinking how crazy that is, that we're part of these companies with hundreds and thousands of beds, and actually at a national level, not everybody knows exactly how many rooms have been sold or the value of those rooms. And I think some of that does still continue today. Obviously, some operators are further forward in their reporting journey than others, but a real challenge for everybody. And I know StuRents has a wide range of clients in all sectors of the market, as Rich alluded to. So being able to access information in real time, being able to automate as much of that as possible, and also being able to lean on some of those other partners where you might not necessarily have the scalability of portfolio or of bed spaces, but there are solutions within what we've done that can be used for a number of kind of use cases. I think the direction that we all need to be moving in is around accurate and timely reports, but also that it can be shared quickly, that there's a single source of the truth that aids decision making. And that also allows some visualization of that data, and it allows important decisions to be taken promptly. And that's at all levels as well. I think we tried to create something that applies as much as it might apply to the general manager and the site team, through to the sales team, and through to the investment teams as well. So that with the various different hats, that these are useful to all levels of the business. So as a partner of Concurrent, our team are well along the journey of understanding the data that comes out of Concurrent, and the number of reports that we've knitted together and made work in a format that has worked relatively successfully so far. And obviously we're working with partners at this point in time to deliver further reports at the moment. And our understanding on how those reports can be interpreted, and all the different types of data points that Concurrent are allowing clients to export. But additionally, on top of that, we've worked with our team and with our partners to work out the key information that clients also need that's not held in Concurrent. And I think that's an important part here. Concurrent is the leasing platform, the software gathering those bookings, but ultimately somewhere outside of Concurrent, there will be some forecasts, there'll be budgets, there'll be sales strategies, and pulling those things together is where I think the important value can be added as well, because having all that in one place just allows you to understand, as I said before, at a glance, at the click of a button, exactly what's happening in your market and in your properties. So we are also exploring the ability to integrate more widely with things like accounting platforms and deliver a completely single reporting suite for clients. Within those reports that we gather, there's a lot of data transformation taking place, and making sure that the right data is looking up to the right customer record, as it were. But what I wanted to sort of talk you through really is the suite of reports that we've built, go through what they look like, and just some visuals so you can kind of understand the journey that we've been on, And I suppose this is a sort of starting point, really. We feel like we're well along in terms of the work we've done with Concurrent and the partnership that we've built with the team. But then there's lots of opportunities here, and each individual case that we've built has its own sort of bespoke requirements, and that's something that we've been developing over the past few months. And I think the other piece here is that the reporting is starting to enable clients to focus on critical business tasks, as I said before, rather than expending time collecting the data or breaking data down into different cohorts, actually understanding what's important, what dashboards do clients need, and being able to make those decisions. So being able to see those benefits against those other data points, that's where most people on this course time is going to be best spent making decisions, seeing opportunities before the competition or before earlier than you may have done in previous leasing cycles, particularly at the moment where we're obviously seeing a number of challenging markets and evolving kind of situations in many locations. So I think that's a key sort of benefit of this. Some people will prefer the more visual model, and again, that's where I think it's important that this also works at site level as well as investor level, creating reports that investors can be comfortable with, that perhaps have a similar look and feel to those reports that they've had for years gone by, because a lot of time and effort has gone into previous reporting. But also the ability to make changes and updates when necessary. So understanding where new campaigns may land, or where minor changes may need to be made to the reports. And again, as I say, all of that is available through the integration that we've built with Concurrent. So let's just run through what we've built. I thought, given the time of year, we should start with the leasing report. And here we're tracking headline leasing performance. So the sort of power of these reports, I suppose, is that you can track to any level necessary. So be that a portfolio, a specific investor, a specific location, we're starting to give you the power to control exactly what you need and to understand what's going on. So Concurrent give you the kind of high level data. We break that down, interpret that into something more user friendly. We overlay with that some of your background information, if you like, as I say, in terms of budgets, forecasts and things, but also then I give you the tools to then go further through that and understand exactly what's going on in as much detail as necessary. So this dashboard is intended to be used on a regular basis so that you can track things like incomplete bookings at a site level, but also see what's really going on and see where some of the risks as well as the opportunities may exist. In some of the early days of clients transitioning onto Concurrent, we've noticed bookings that are pending signature, for example, where we were able to really quickly jump on those and ensure operating procedures within clients are really tight and really robust. So being able to report quickly on what's going on in the system, identify improvements, but also at the top level of where are those opportunities to perhaps drive price or take decisions that may need to be made to sort of protect the position later in the year. We also track in this dashboard a number of forecasts as well, and again, that's information that doesn't necessarily exist within Concurrent, but allows us to pull together a number of different pieces of information and build some of our own formulas into this. So an output position is available again by room. So not just what's the position today, but what will be the position in the future. And obviously we have various discussions with clients about how they best like to use that, and it's something that we're looking at progressing further. But at this stage, the ability to see what's the current room price, what's the projection of where we're likely to end up if we continue selling as we are, again adds that real value, and is something that's important at all levels of the business. We then drill through to booking performance. So again, by whatever measure may be most significant, but here we're showing kind of contract lengths, room types, status of contracts, and so on, all of which is available, and value of tenancy per asset, to give a real sort of clear view of what's going on. The other important thing with this, which I'll come on to shortly, is that the data can all be exported in a simple PDF, which is intended to go straight off to whoever needs to see it, whether that's internal teams or onward to investors and funders. And again, gives you the ability to add and remove things that are important to you and important to your business, but also to be able to take things like some of these charts here and use them as necessary, as and when required. We can also track through leasing demographics. So those of you less familiar with Power BI will see some of these lines are faded out. So this allows you to drill through to room level. So here we've applied a filter to a specific room type, and then we can see exactly what type of student or where people are studying, who is going in that specific room. So again, if there are opportunities exist or challenges that are happening in your market, you can understand those a little bit more deeply, and again, hopefully take action sooner rather than later, or be well versed in those opportunities for the year to come as well. So it's just an illustration there showing some of that drill through that we can deliver in this. And a labour of love for our team has become velocity curves, and Rich shared some of these previously, but we've been able to overlay live concurrent data with historic data as well. So wherever your prior data sits and information that you might currently hold, I don't think we're necessarily at a point where there's a normal year in the cycle at the moment, but we've certainly worked with some clients to move beyond some of the COVID years where some of the curves do all sorts of weird and wonderful things, and we're sort of moving forward, but every year seems to be slightly different, some more. But it does allow for that year-on-year comparison and that tracking against prior year, which is obviously continues to be important despite some of the changes and challenges across markets. And then we've also created the in-year dashboards. So obviously the sales process and sales cycle being a key part of the operation, but actually making sure those people that turn up are checked in, are in promptly, that you don't have, in this case, 197 rooms, but only 100 people have turned up, and it's the second week in October. So really giving those management tools across all levels of the business, being able to ensure that the revenue that's moving into your building is secured, and that the bookings that you've taken are in line with budget as well. And again, we can then drill through here in terms of by room type, by student type, demographic, and such like, to really get an understanding of who's in the building and what's really going on. And I suppose, again, at the various levels, that can help shape some of your offerings, some of your support services, and also your sort of future marketing strategy based on where most of your students are coming from. And related to that, we also have an arrears dashboard. And so a huge amount of data that comes out of concurrent when it comes to rent arrears and arrears reporting. So consolidating that down, both for property teams and operators, but also at a finance and investor level around cash flow as well. So we've managed to do both those things with the arrears reporting, to break out a kind of traditional, simple 30, 60, 90 plus arrears report, but also give a view of exactly what cash is due to be coming into the business and how overdue are certain installments and what's happening across the piece. And that was something that was really important to our clients, and something that, as I say, has a lot of information coming in from concurrent all in one place, which adds a lot of value. We've also recently built out a further view of this, which actually tracks this now down to student level as well. So empowering site teams to use this almost as their single source of truth on a kind of daily basis, which again takes away the need for them to be running too many reports. And I think we're obviously not directly an operator, but in my mind, the ability for site teams to get their hands on information that's accurate, that's the same as their peers, and is available for them to use it as quickly as possible is crucial. And just moving on to the final piece, we have an investor pack, which I mentioned earlier. And again, the intention here is that the key metrics to you or your investor are available easily. So there's no copying and pasting information into emails. It's something ready to send through. It's something that is effectively date stamped at a point in time that everyone pre-agrees, and it's going to be there week on week, and has the requisite level of drill down. So the examples here may have slightly different diagrams and graphs to what you may need or may share with your investors, but give a good flavour of the headlines. And again, some of that forecast and that room level data which we think is really crucial. But that just allows, again, as I say, a single source of truth where all these numbers should be aligning back to the source data, which has been interpreted in a consistent way, which is something that can obviously be challenging across many organisations and across a number of locations or a number of properties. And just to conclude, in terms of where we are with this currently and some of the sort of our key thoughts on this, I suppose, I think the importance of having a strong understanding of exactly what data you need and what you want. I think our hope at the start of this project was around, you know, a sort of plug and play model where we said, right, here's the relevant StuRents reports that we need, and we can run this for multiple clients. But actually, everybody handles bookings differently. Everyone has slightly different needs. So being really clear on what are the key metrics that you want to see and what are the important aspects for you and your investors or your funders. But also ensuring consistency of the use of your system. And again, it doesn't matter whether that's concurrent or whether it's reporting in Power BI or whether it's something else altogether. But the data will only be as good as the data that's going in, the information that's going in, and having your teams following clear SOPs and processing bookings in a set, controlled way starts to mean over time you get this nice clean data set. And I think that's the biggest challenge in this, and one of the I guess challenges of any reporting is that quality at source. So for us, they're probably the two big takeaways, that when we start on this journey with clients, more and more is about understanding how are they using the system and how what are the most important things for them to be able to see, so that we can try and deliver something close to what they need within a framework, as I say, of the key metrics that we've identified. And I think the sort of conclusion, I suppose, the reporting on that note is never kind of without its challenges, and I think we have probably clients on this call who vouch for that, where we're constantly trying to ensure everything is absolutely perfect and coming out of the system in the right way. But as we said in the Occupancy Summit, and as we said at the start of this session, getting good visibility over what's going on allows you to not only resolve issues and encourage good practice, but also to maximize opportunities and deal with issues as they present. And I think for us, that's the important thing, that we're aggregating some of this information for clients, giving them good visibility, and hopefully enabling them to maximize any opportunities that may present for them. Thank you very much for listening, and thanks to the team for inviting me. You can get in touch on the email below, and I think at the end of this session there's also a form where we can then connect, and we'd love to follow up with people and talk in a bit more detail. So would love to spend longer on this, and conscious of sharing too many images on screen and talking through in a very whistle-stop manner. So thank you very much, and back to Rich.
Yeah, thanks, Scott. I know the Occupancy Summit, obviously, as you mentioned, financial reporting is a major pain point for a lot of people. So the fact we're starting to kind of build solutions together to address that is really good to see. I'm just going to stop sharing the screen, and then we'll have an opportunity to go through the poll and also look at some of the Q&A that's been submitted. We probably have about 10 minutes, Calum, I guess. So we'll try and get for a bit. So if we go to the poll, and I'll hand it back to you, and then we can go through some of the questions.
All right, great. Thank you very much, Rich. So just to whiz through this really quickly. So expectations for rental growth in the PBSA market, around half of you are neutral this year, also leaning more towards the negative side, so around 33% on that more negative option. On the HMO side of things, again, a very similar picture. So 60% neutral about HMO rental growth, again with a quarter in that negative bracket. And overall market sentiment, so there's kind of a mixed bag here. So 38% of you unchanged opinions over the last 3 months, and then 40% more pessimistic. So I think compared to the last quarter, there's a few more pessimistic people out there. But yeah, that's the poll. So I think that brings us on now to the Q&A. Yes, we've had quite a few questions come in the Q&A section. So if we can't get through all of those, we'll be in touch after the call with some more answers. So to jump straight in, Rich, this one is for you. So how is occupancy looking for the next year in the top 20 cities?
Yep, that's the ultimate question. I think for anyone interested in that, obviously get involved in the occupancy survey if you can, or get in touch to receive that information. I think without giving away too much, I mean, and actually, I think that poll summarised it quite well. It's a very mixed bag. So there are certainly some locations that have improved year on year. There are some that have definitely deteriorated year on year. But equally, what we're seeing, again, I mentioned this on the slides, even within the same city, there are, in some instances, huge differences in performance. Again, current year, but also compared to last year, between individual schemes. So you'll find in locations you have one scheme that's fully sold out, you have another scheme that is, let's just say, struggling, and that can be a pretty big spread between those individual schemes. The other kind of, I guess, takeaway, I mean, Glasgow, is a good example of this, where certainly this year has been slower than last year, but last year was an extreme example of a market that was probably too hot to a certain degree, and that's definitely been reflected in the occupancy data. So if you actually look at the long-term trend, whilst we're down year on year, we're up prior to 2022. So again, it's interpreting the data and actually looking at, is the year-on-year comparison the right thing to do if last year was an anomaly? And in certain markets, that will be the case. There are some cities, again, post-COVID, we're still seeing impacts of that, where some universities over-recruited in certain demographics, so cut back. So again, there's I'd say a fair bit of volatility, which is something we've discussed before, and I think that's still definitely playing out in the market today.
Great, thanks for that, Rich. Scott, one for you here. So how frequently can a Power BI dashboard be updated via Concurrence API?
So the Concurrent API runs, I think it's every hour or every couple of hours throughout the week, and then we tend to set those refreshes with a client based on their needs. So it's something that can be slightly tailored, but fairly regularly is the answer, multiple times per day in many cases.
Great, thanks. So Rich, another one for you here. So how do you analyze the supply compared to various housing options available to students? So i.e. not only PBSA, but also, the HMO side of things. How is BTR supply affecting PBSA occupancy and rents as well?
Yeah. So yeah, I guess to talk about HMOs in particular. So yeah, I mean, that's certainly a lot of, we spend a lot of time doing that in terms of looking at things like price spreads, looking at demand by accommodation type. So certainly when we're looking at supply and demand, we're not, and again, typically what you'd find in the industry is student to bed ratios assume every student wants to and can afford to live in PBSA. That's just not true. I mean, there are certain locations, I think Leeds is a good example of this, where if you look at any of the new PBSA that's been delivered in the last 2 or 3 years, it's £200 plus person per week. If you look at what students are actually signing their contracts for in the HMO market, it's more like £140 once you've taken into account bills. So to assume that every student in a HMO would suddenly go and live in a PBSA is just not correct. So we do a lot of work at looking at supply and demand, but also looking at price sensitivity and the difference in pricing between accommodation types. BTR is an interesting one. It's, again, been spoken about a lot recently. I think there is certainly more work to be done there for sure. There are certain locations, again, actually Leeds, interestingly, that has seen quite a bit of BTR stock being delivered in recent years. So it will be one that we need to kind of dive into more detail, to be perfectly honest. But we know, anecdotally, in London, for example, you'll get BTR schemes that have a substantial proportion of students living in them. So it is certainly something the market needs to be aware of, and to take a closer look at for sure.
Cool. I guess that then sort of feeds into that rental growth piece as well. Bit of competition. That's kind of why we're seeing some of those smaller increases in some.
Yeah, definitely. And even if you look at some of the BTR schemes, I mean, you go onto some of their websites, and the contract start date will be September. Well, that's basically PBSA. So, or very similar in terms of contract start dates. So some of them are being directly targeted to students. So yeah, that definitely is going to, in some markets, make it more competitive, which may or may not be a challenge depending on the underlying fundamentals.
Cool. Scott, another one for you here. So are there further levels of bespoke reporting and additional insights that can be developed? So like, if a customer would require a particular report?
Yeah, absolutely. Yeah, I mean, it's something that we're keen to do to both develop some of the. Yeah, we obviously have a number of things in our plans that we'd like to add to the reports and opportunities that we can see within the data. One thing we have done also recently is handed some of the reporting back to a client who's making some of their own changes, which is going really well and looks really good as well. So, our intention is to support clients as much as possible. And I alluded to in the session there, I think there's many kind of aspects to this that can be integrated. So we have a number of client dashboards with their supplier agreements, with their contractor performance or security performance and their leasing performance. So we're trying to bring together a number of things to create a bit of a hub where operators can see exactly what's going on from a single place, including financial data that I think we mentioned before. So yeah, we're keen to try and add as much to that as possible when the opportunity arises. Yeah.
Great, thanks. So Rich, one of the ones that's come through just now, do you foresee an impact on the rental prices for the upcoming years, given the increase in proportion of domestic student combined with the decline in international students?
I guess not to sit on the fence, but I probably will do. So I think it will come down to the specifics. So good example of that. I mean, when we've looked at rental growth in a specific city, for example, again, you will get huge spreads in performance between individual schemes. So you might get a location that has, let's just say, 0 rental growth. One scheme has 5%, one scheme has -5%. So again, it will come down to very much the individual scheme, price point, what its core demand is, etc. I think, again, it's difficult to say in broad brushes because you might get a rental growth figure. I think Unite were predicting 6-7% across their portfolio from a national perspective, but that's kind of meaningless if you're looking at Glasgow versus a Sheffield versus a Coventry. So again, it will come down to the individual city and even the schemes within those cities. We've done a lot of work recently with customers looking at rental growth, and again, whilst city level is useful to a point, it's arguably better to be looking at comparable schemes rather than the location as a whole, given how big that spread in rental growth can be, which again is pretty significant.
Great, thanks, Rich. Probably one more to wrap up, just looking at the time. So one for you, Scott. Are there any licensing restrictions at all around the use of Power BI?
Yeah, I think many clients that we work with tend to have a sort of fairly enhanced Microsoft package. I know there's some changes at the moment with Microsoft and Fabric and some of the licenses around that. But yeah, we've generally found clients just need a sort of fairly inexpensive additional license. Obviously, that can become like a slightly more significant cost than you expect when you're pushing that out across the whole country, across a number of members of staff. But I guess the opportunity cost, sort of time saved and people doing the right work rather than running their own reports, perhaps outweighs some of that. So there can be in some cases, but from what we've seen, the setup that we've managed to introduce with most clients has certainly not been prohibitive, put it that way.
Great. Thank you very much. So bang on time there. So I think we've dealt with quite a lot of the questions. So a few more have come through. So we'll try and get back in touch to answer any remaining questions. So it just leaves me to say thanks to Scott and Rich for your time today. And thanks for all the comments and for joining along with us. And yeah, we hope to see you all again soon. Enjoy the rest of your afternoons.
Yes, thanks everybody.
Thank you. Cheers.
Cheers.